Hey, what's up, everybody? Welcome to another week of Market Pulse Update with Dana and David. How are you, Dana?
I am good. How about yourself?
Good. I think maybe put on a suit jacket to get on here today.
Got
Trying
to dress it
to.
up a little bit.
That's right. I probably should shave.
Yeah.
All right. So we got Easter coming up this weekend, which we know has some impact on the market. Also, a lot still going on in the world. Can't figure out how to get oil through the Straits of, however you say it. Was it the Straits of Trump now? Did he rename it?
I don't even know.
Now, hopefully, some optimism around the war maybe being wrapped up and what do you think? What's going on in the market this week? How do you expect Easter to impact overall sales?
No, great questions. I feel like showings have picked up just over the next few days for the remainder of the week. So that is encouraging when looking at our listings. It looks like, on our team, right? We've, I think, written already $5 million this week. We picked up 98 new clients in March. So if that's any good indicator, and that includes both buyers and sellers, I think that's a good projection of what's to come. And I did look back at this same time last year. I think Easter fell on April 20th last year, and so it looked like everything was pretty strong through April and really through the first week of May. Actually, it peaked shortly after Easter.
Yeah. Yeah, I think the interest rates will play a little bit into this. Last year in 2025, we did not see as much of a selling season, just due to interest rates and a lot of stuff going on.
Hmm.
You just mentioned, 98 new clients hired us in March, right, to represent them. We've seen a really big push in really January, February, and March. I shouldn't say a big push, on par year over year with normally what we see this time of year. Is I'm curious to see what happens as we've seen interest rates kind of peak back closer to 6.4% on a 30-year conventional. We just celebrated our biggest March ever, right? I think 31
Hey,
million, almost, I know that's awesome. 31 million in volume. Biggest volume month ever. We had 50 clients. Do you have a puppy in your lap?
I
You want
do.
to
I just
introduce? What's his name?
This
Dana got
is
a new puppy, everybody.
Bo. Isn't he precious?
Even, as I said, it looks
He's like our
fake.
new little mascot, little Bo.
Is. I don't know how you
Yes.
can't like that. I know. You guys and your doodles. I know. I got pit bulls. Mine just get on here and lick the screen. They're not as intelligent as those doodles are. Anyway,
Mm.
so in thinking about the impact of the interest rates, curious to see how May and June play out, because if we continue on this pace, we would anticipate some slowdown, and yet 3 or 4 weeks since rates have kind of started to peak. That really hasn't shown up. Like you said, you said 5 million. To put it in perspective for people, it's Wednesday, right? So we measure Friday to Friday. Um, an average to good week for us is about 5 million, right? 5 million in sales each week gets us to about 250 million. But last week, I think we pinned in 9 million, in
Yeah, it
volume.
was
So
just shy of 10 million.
we've had a lot of up weeks. How do you explain that, though, against nationally right now? It actually is showing sales being down, for the first 90 days of the year, really trending more towards a 4 million size, which is a little bit behind where we've been the last few years. Anything
Right.
that's happening different here locally or with our team specifically that you can imagine that might drive that more than just charisma?
I'd like to say it's charisma and luck, right? I can't think of anything really off the top of my head, yet, you know, with us being, licensed full-time experts out there, top tier negotiation is key. So I do think that comes to play a part. We also have tremendous partnerships local lenders as well. And so, even if you don't think you can afford it, right, a big topic right now is affordability. And so putting them in the hands with someone that can, and it might not be now, but maybe it's, 90 days, perhaps there's some credit repair, but there are options and products, loan products out there for just about everyone to be able to make something happen if that's in your cards right now.
I think we're also very blessed to be in, Davidson County, Wilson County, Middle Tennessee, right? We have a
Hmm.
pretty diverse job economy. We're still very attractive for other, states and cities to move to.
Right.
very tax friendly saying. So you still got Oracle still developing and moving in a lot of major businesses. So maybe some of that helps us a little bit. I think you're probably right, though. I think, as we would say, the top 10% of the agents in the business are doing 90 to 95%. We're seeing a bigger disparity right now between producing agents and non-producing agents. We know for the last 2 or 3 years, the average agent has done less than 4 transactions, which to me is really challenging, right? It's always, not to make it a pitch about us, but if you're an agent out there and you're thinking about how to grow your business, our businesses are booming right now, and we need a lot leads and doing open houses and talking to clients. And so would love to have a conversation. We're really trying to find some talented humans right now to come into our organization, our world, to help us with some of the business that's being created. So if that's you, reach out to me or Dana. Would love to share our experience about why it may or may not be a fit for you. um, okay, so we got Easter coming up. You doing open houses on Sunday?
No, typically we have recognized that that is not a great day to do it. So we
Not a
are
great.
starting to, on holiday weekends, we typically do put them on Thursday evenings, just to kind of catch people coming home from work. So we've seen some good traffic with that, and we kind of trickle that over to like Mother's Day and Father's Day and some of those, Sunday family days, so to speak.
Yeah. Yeah, if you're a buyer or seller out there thinking about moving right now, if you've watched any of our episodes, you've heard this, but because the difference between a 5.9 and a 6.4 is probably $50 a month on the um, average mortgage. And so when you think about those terms, you go like, would you rather uh, be a qualified buyer in a less attractive seller's market where you have a little bit of right to negotiate, you can ask for certain things, you can do some buy downs. A lot of sellers out there motivated to sell because now we've seen a little peak, right? I mean, we've sold a lot of houses, and so that takes inventory off the market. But you've also took what your team took 26 listings last month coming onto the market, right? Is that about right? 26.
Actually ended up for 29 for tracking purposes, but
29 deals in March, and again, probably usually see that about the same for April. So as many that are coming off are coming on. So if you're a buyer right now and you're qualified and you're really looking for the right place, I would much rather be a 6.4% buyer in a market that I can find a good deal and negotiate good terms on than a 5.9% buyer I can't find as attractive of a deal. Right? And so I don't want a 0.5% interest rate. We can sometimes follow the masses. And that's really what you and I are seeing right now in the business, right? The last 60 days have been gangbusters, right? It's just chaos because we saw rates dip earlier this year to 5.9, which got a lot of people off the fence. 6% is that psychological number. What I don't want is our clients to follow the psychology of the masses and think just because rates get below 6%, that becomes a much more competitive market where more people are
mhm,
qualified to buy.
yeah.
So I want our clients to hear us in the fact, like, it is a really good time to call us up and have this conversation because it may not make a ton of sense to wait. Again, I don't expect
Yeah.
rates to go to
No,
five.
and I was even talking to one of our agents yesterday, and she's been in 3, if not 4 multiple offer situations for the same client, over the past 3 or 4 days.
Yeah.
So, they're just going off at certain price points for sure.
Yeah, it is price point driven, right? Several of our
Yeah.
listings got multiple offers over the weekend. And so you see that very, very segmented, right? Depending upon location and price. And yeah, you go, man, if you're really, I mean, here's the thing people got to realize is we probably won't see rates get below 5.5. So when you think about the window, because in order for them to go below 5.5, let's think about the psychology of that. If rates got to get below 5.5, something's got to really go wrong in the world. Now, again, I think I was talking to a lender this morning. It's like, isn't it funny? We said, like, all right, rates are below 6. We should be fine as long as we don't go to war with somebody. Lo and behold, right? We pick up and go to war with somebody. But if you think about rates going below 5.5%, the only reason they would get there is inflation would have to really be coming down and jobs would have to be really, people would have to be losing a lot of jobs, right? So in order for the long-term 10-year treasury note uh, to follow that, you go, if we get below 5.5, there's probably bigger problems in the world. And it's probably an unhealthy, unsustainable interest rate again, which we've seen the problems of that. So when you put that into perspective, you go, guys, we're talking about a healthy rate for the foreseeable future of somewhere between best case scenario 5.5%, which I still think would be another year before we're even potentially there, and maybe six and a quarter, 6.5, right? So within that, you really got to think about where you're at in life and what you want to accomplish, because that's not a huge range. And so what I don't want people to do is just follow the media or follow the masses and think like, oh, well, my Uncle Johnny said it's a bad time to buy because he bought a home at 3%. Who cares? Uncle Johnny doesn't know crap, right? Like you need to be listening to your professionals and talking to them about what's best. Are you
Well,
running
and
into that?
on rates, I feel like it's kind of like what we're entering to right now, which I always have made a joke in the past. When gas prices, went up when we were in high school, the glory days back then, we just had to accept it, right? And it's kind of like rates. And now, in some parts, I mean, we're what, close to $4 a gallon right now. And we have to drive, right, to thrive. And so people are always going to have a necessity to move. And what I wanted you to point out too, David, I know in every team meeting, because I know you love the numbers. And if you wanted to simplify kind of the numbers, I know the slide that we put up every day in meeting from one of our preferred lender partners kind of breaks that down easily. So, what is that statistic for every $100,000?
Yeah, for every $100,000, you mean in home value
And,
versus the
and
interest rate?
well, for your monthly mortgage payment.
Yeah, I mean, look, if the rate goes up, a half a point, it's about $40 a month, right, on the average home. So really, for that, you think at a 6% interest rate, you're at about $600 for every $100,000 financed. At a
Hmm.
7%, at about seven, or 6.5%, you're about seven, at 7%, you're about eight. So you think about that in terms of the average home's $425,000 in our area right now. So if I'm trying to think about the average movement of rate, a half a percent really just doesn't impact it. Again, I think the math I did the other day was like $50, right?
Yeah.
The
Yeah.
difference on a $435,000 home between a 5.9 and a 6.4 is probably about $50,
Yeah.
right? And
Well,
I'm not
and,
saying $50 isn't a lot, but like you said, it costs that much to
yeah.
fill up your tank.
Right. And, I always kind of do this joke, right? We're a economy of convenience now, right? A society of convenience where I say, can cost $30 for lunch when I'm paying for that convenience through DoorDash. Just make my lunch twice a week instead of ordering DoorDash. And lo and behold, there's $50. And so even just simplifying it makes it a heck of a lot more, easier to grasp and to understand what we can truly afford.
When we think about also that, we think about that in terms of like today's dollars. Rents continue to go up. Not having a place to live is going to be a challenge. Everybody needs shelter. And so today it's $50. But 5 years from now, with inflation, it's not $50, right? And 10 years from now, it's not $50. So the great thing about buying a home is you're able to lock in your monthly cost. And yes, if you're going to move within the next 12 to 24 months, that's a questionable decision about, financially, it's questionable. Uh, if you're going to stay longer than that, life goes right. I mean, the world is designed with inflation in mind, right? Things should inflate at a certain rate. They need to, right? That's why the stock market goes up. That's why real estate goes up. Things like that. We've shown this slide a few times, Dana, but we go back, share my screen here just a second. Uh, Again, and kind of show the trend line here of the research and kind of understanding that because we're 7.4% above the trend line. And so if you think that things are expensive, you go like they are, but in proportion to the incomes that we're making and things like that, you go, yes, are we having to pay a lot more money for homes than we did than our parents? Of course, but so did they, right? Like that's a pretty normal thing. And so as you kind of follow the trend line and go, if we were exactly on trend from 1990 at an average pace of long-term trend of 4%, you kind of see the market went up in the mid 2000s, and then it dropped down to make that correction, and then you saw it approach the trend line. So you've seen it kind of go up now. It's been over the trend line for 6 years, and so you go, all right. The challenge in bringing that correction down. So here's how I like to think about it. homes are probably going to appreciate at a 2% over the next 24 months, which would be, you'd expect them to be at 8. So that's a 6% swing. So you're right back on trend of what you should be paying for a house. And so again, if you're listening to the news, right, or you're listening to the media, and you're thinking like affordability is such an issue, is it overpriced? A little bit, but it's not this massive undertaking to go out and buy a house at a average interest rate of 6%, which is what they've been for, the average for the last 50 years, and a home price that's 4% above the trend line. Like, that's okay in life, right? I think you're going to find that it's going to be a better purchase now. So I think we got to be real careful of the stories that we're listening to, and trusting that our agents can help us find that right deal, because those are national trends. But you may still be able to negotiate a deal locally to where you buy a home at a discount, right? Or more on trend line. That's where a successful agent like Dana or someone from the High Figure Group can jump in and help. All right, Dana, you got any peeps jokes?
What did we used to say? Who are the peeps that you know that are looking to make a move this
That's
spring
right.
or summer?
You got any peeps looking to move? So we got
That's
any
right.
peeps looking to make a
I think I
move?
have a
Dana and I
shirt.
should have worn it. Dana and I would love your referral. Send them to me, not Dana. We're not competitive, but I'm competitive. No, I'm kidding. Reach out to your favorite Huff Acre Group agent. We would love to talk to you about what's going on in the market. We're not going to convince you to do something you don't want to. We're just going to provide perspective so that you can make an intelligent decision. Dana, have a good Easter. Take care of
Yes,
that puppy.
everybody have a great Easter.
See
Take
you
care.
guys.